Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Thursday, and this is November 7th, 2019, about 3:18 in the afternoon Central Time. You know, it was just a year ago where the stock index, I was looking at the Dow to be specific, closed around the 26,600 level and crashed back to the 21.5 area. And from then, it's been rallying. Very interesting, isn't it? So you always remember those things. Do I think that's going to happen again? No. I think that we're getting breakthroughs in the U.S.-Chinese deal. There is not a deal yet. There is give on both sides as to what the tariff removal process is going to be like for the first phase. Now, for the second phase, we don't even know. What's in the first phase? You know as much as the next guy next to you. We don't have all the facts. We don't have all the figures. But the market liked the fact that the U.S. and China are coming closer to the end of the problems than rather in the midway through or getting into further issues with each other. That's what this is about. So what happened today is you took out the asset plays that in the summertime so many people were playing. What do I mean by that? If you'll remember at the end of the summer, recession talk, inverted curve yields, you had all that going on. Today the bonds and notes, they came down dramatically, took out probably the remaining longs. Do I think that the market's going to find bids down here? Well, that's what we're going to talk about in a minute. In the metal markets, you're still in a washout phase. We'll see how far down that wants to go. And currencies, I don't know what they're doing here. They certainly didn't respond in much way that was large. The British pound, we saw the Bank of England holds pat today. Two members, though, on the voting board were against keeping rates steady, as the bank did. They wanted to see cuts. So we see the first pressure there. And of course, Brexit, December 12th, we find out more about. So let's go to the charts. First off, on the weekly area chart of closes, for the week, it doesn't feel like it, I'm sure of that. You're up 23 points. You would think you're up more than that, but you're not. 23 points, sustainable. I was just on Fox Business News at 2:10 in the afternoon or so, and I was saying that. I said that I think today was better that the market didn't get crazed than going totally insane upside, something not sustainable. When you take a look at the rally today, the one thing I see is how the market corrected yesterday and surged forward today. It puts the swing line, and it's been this way recently. You've had, from this point on, higher lows, higher highs, bullish. What's the number I don't want to see taken out? 30.63. Why? That would break the swing line for the first time the way it did back here. It doesn't mean you get super bearish, but it might be a sign that you're ready to stall or correct a little bit. What about the support? Well, as I told you, that 18-day average is now climbing away. It had gotten over this number. Now this number is still well above it. This is 30, let's call it 30-30 to just round it. It's 33 points away. So they were just now in the office. We had a short meeting as to what I was thinking on this. And I said, you know, if you take that out, if you lost the embedded reading, okay, then I could see the 18-day average being challenged wherever that number comes up. I don't know because this is a daily chart. It moves a lot. What other thing am I looking at? I'm looking at the Bollinger Bands. Now, this morning when I did my morning subscriber video, I was clear. I said, be careful, folks. You're going to get people on that news that could jump and say, I want to get bullish. You don't buy over Bollinger Bands in the way that I teach charting. That doesn't mean you can't do it, that you're not right. I don't run your money. I sit here and I run what I'm doing for my subscribers, if you will, putting out the best I can see it. That's a resistance point, and that number's 30.95. It is an all-time high. Did the market stall there? Well, it did. You finished at 30.86. The high was 30.97, right against that Bollinger top. What about the embedded reading? As long as it stays in place, I say that while the pros might come out at Bollinger tops, they're buying the market on breaks. And I discussed that in my morning subscriber video. There is a moving average that I use, and I show you how to use that one. I don't show it on these charts. The next thing I'm looking at is the NASDAQ. Same thing. I'm looking at a market that the Bollinger top was 82.8925. Your high today was 82.82 and a quarter, so didn't quite get to it. I don't want to see 81.61 taken out. And the one thing I really care about is not turning down the slow stochastic. Until that turns down, I say that on the pullbacks, the pros are in there buying. Now the Dow got up and closed over the upper Bollinger Band. It finished the day at 27,673, about 80 points or so over that number. It's not the first time it's done it. It did it back here, then it pulled back under, and so on. It also just embedded. So this market, yes, it's displaying great strength, but I think the traders will not be buying aggressively over that number. They could, because it's embedded. I did not argue it. I think that they're going to try to come in at a better price. In the Russell, the upper Bollinger Band, 1611.5, today's high, 1610.60. So basically that number. And that's all you're looking for, that zone. Now, what I don't like on this market, this is a market that I'm scared of now. You lost the embedded reading. Admittedly, you only lost it by 3/4 of a point, but you lost it. If it doesn't gain it back immediately, I'm looking for price in the 18-day average to try making a run at each other just to get the market out of an overbought condition. Now, you're overbought, no longer embedded. The VIX. The market's never made it down to that lower Bollinger Band for the pros to sell puts. We've talked about that. It's also not an embedded reading. So I have for divergence. I have the swing line with higher lows, higher highs. Today's break low of 1226 did not take out the previous low of 1225. However, the resistance is pretty clear at this 18-day average of closes, and you're not embedded. In the Nikkei, got up, closed first time in a very long time here, back in the mid-October, 3 weeks ago or so, over the upper Bollinger Band. I'm going to say it again. Markets stay only 5% of the time over those numbers. So to get a pullback, when, where, can't answer that. Trend is up. I wouldn't want to see, if you want to keep the trend up, that you take out 23,250. Number two, I don't like being over Bollinger Bands. Markets often pull back to them. In the bond market, well, now we've got to keep our eye right here. The 18-day average, number one, is flirting with getting back underneath the 100-day, a bearish crossover. Number two, the market's been in a downtrend, or has it been? Actually today, because prior to this you had the higher high, lower low, and with today's action you confirmed it, but you're instantly oversold, you're overextended under a lower Bollinger Band. Can you go lower? Of course you can go lower, but selling under a Bollinger Band is not one of the things that I recommend or teach. Same thing in the 10-year notes. You're under the band now. And you haven't been under these bands in a long time. And some markets pay more attention than others to that rule. And I think that you'll find that the Treasuries, it's rare that you stay out of that Bollinger Band very long. TLT, same thing. Lower highs now, lower low. It confirmed its downtrend today. It closed under the Bollinger Band, oversold. I'd be surprised if pros aren't taking some money off the table. And in the dollar index, you went up to the upper band, and guess where you stopped? Literally against it. The Bollinger Band's 98.05.5. The high was 98.07. You finished 97.98. All I'm saying is that's where I think the pros were able to take some money off the table. And in the euro, it's the flip of that. It went down to the lower band, and that was a profit number, I think, for the shorts in the market. Again, there's no magic to what I'm doing. Can the market go further? Well, we've seen it get under a Bollinger Band and go further, but you're in a zone. And when you're trading futures, zones are everything because the leverage is so big. You're putting down, in round figures, 10%, no interest charge, and you got 90% leverage. You got to be careful. When you're trading in the British pound, okay, where did you go to? Lower band, you held it. That's all I cared about. So I think that right here, the market's fighting a battle. You've got a higher high, lower low pattern into a lower Bollinger Band, and you're oversold. Japanese yen, right back down to the Bollinger Band bottom after making a run yesterday for the 18, actually it was today for the 18-day average. It was last night that I'm talking about the action here, and the market finished off about 30 points. Now, the settlement, 91, well, the last trade's 91.68, literally right on that Bollinger Band bottom. You can go lower, you can go higher, but you're in zones. You don't have to believe me, but go back and look for yourself. You'll see what I'm saying. Now we get to the Bitcoin. It's now a downtrend in the swing line, but it's countered. As long as prices are over the 18-day average, the bias is up. So the filter of the swing line is saying nothing to do, and you have a market that is still in overbought territory. we were talking about the Brent versus the WTI crude, and you had gotten up just recently backing over this 18-day average of closes. That's my filter again. And when the market did that, okay, if it breaks, I'm going to look for a pullback into that number. That's just what you're doing at this point. You're not moving one way or the other really on it. When you look at Brent, I think today was disappointing for the market. It closed up 50 points, but it gave up the majority of the gain. It got up as high as 62.90, and I think traders, they're saying, okay, no U.S.-Chinese trade war coming to an end of one might be the better phrasing to say, because this thing could drag on this is the easy phase. Can you imagine intellectual property, forced transfers, and government subsidies, as China does with its governments, and you're going to get that change? You've been fighting over agriculture and very minor issues in the grand scheme of things. And market here, support all the way back at 60.64 roughly. WTI, you hit that zone 3 days ago of the upper Bollinger Band, haven't been able to poke through it. Even with you up today strong, still haven't been able to get through there. Overbought condition in gasoline. First challenge of the Bollinger Bands. This is where the pros, I think, step back. Now, can the market fall into here and be a buy? It could be, but it's overbought. So that's a concern of mine. And in the nat gas, with all this cold weather, I'm wearing my winter jacket here. I mean, really the winter jacket. It's outside. I don't think we got above freezing in Chicago. So I don't know if we broke 32 degrees. And that's, I think, 20 degrees off of what is the norms for a low. It's pretty crazy. But not holding the rally all the way back here as support. Are we going to embed? Well, if we take a look, both numbers are over 80. Yesterday, both over 80. Over 80, not the day before. You embedded. So this pullback is healthy, as long as the red line doesn't close under 80. If it does, it smells to me like a bigger break could set into the market. That doesn't mean the trend is changing. You might get more of a correction. And again, you got to that upper Bollinger Band and over, got up 3 days, and boom, you took it all away in one day. That's all that it really is. In the mornings, I start you off, and this morning was the great example. Here we get the news that the tariff situation could be resolved. It changed its face. But what I'm there doing for you in the morning is I'm telling the people that are my subscribers in this video, and a subscriber is my paid subscribers, not free on YouTube, and my videos for the morning subscription are never on a YouTube. They're only through our website or our software. But I went through it and I'm showing them these numbers, and the idea there is to take away the emotion of the morning for you, to put you on a path that, hey, here's what could be happening. Should the beans be up? Should the hogs be up? Going on and on what it meant. And the idea there in each and every day is I'm trying to give you confidence in some of your own ideas, or pull you back from getting emotional about a market and not covering it in the right way that you might. I'm sure today traders going, that's it, this deal's done, the U.S.-China trade war's over. It's not over. If you take a look at what's going on here, this is the sequence I cover the markets in. 40 charts, 5 ETFs, and we have a lexicon on the sides. You can just hit the market section you want. It takes you right there. 26.5 cents a day to get yourself started. I think you can handle that if you're interested in a technical analysis that I do. How do you get there? www.iraepstein.com. Under the word research, you'll see my morning subscriber video and my other research. You know, I don't talk enough about that. I'm going to go back to talking about my whole research package. I had some traders that say they want me to be a bit longer term. Well, my analysis when I write is longer term than the video analysis. The reason I do a video every day is we're trying to catch not intraday moves, we're trying to catch swings in the market. That is the idea. You're going to have winners, you're going to have losers. You got to stay disciplined. That is the key to it, at least one of the big keys. And as you look up here, if you see this icon, if you click it, it'll take you to the subscription page. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.